Hi, everybody. I'm Hector Garcia, CPA, longtime user of QuickBooks. And this is one of the first videos of many I plan to post in my YouTube channel about Intuit Enterprise Suite. Intuit Enterprise Suite is the mid-market version of QuickBooks. When you go into it, it feels a lot like QuickBooks. As a matter of fact, it's actually built in its own, in the same architecture. So when you upgrade from QuickBooks Online to Enterprise Suite, there's actually nothing new to learn. So it'll be a seamless transition. This is actually priced much higher than QuickBooks Online. Like for some people, 3 to 5 times more than what they pay in QuickBooks Online. So it's really focused on those larger businesses or the larger echelon of the small business or the lower echelon of the sort of mid-market type businesses. This was released in September of 2024, and they've had 3 major releases of new features. And in this video, I'm going to talk about the new features that were added in summer of 2025. Now, this is actually part of a podcast. I was actually demoing this for my friend Alicia from the unofficial QuickBooks Accountants podcast. I'll put a link to the podcast. We actually had a much longer conversation with a lot of side commentary about what this is, what this should be, the state of QuickBooks versus IES, all that stuff. But in this video, I edited just the stuff that's a live demo of the actual features that you see in Intuit Enterprise Suite as of the latest release of summer of 2025. And they promised, or they stated, that they're going to be adding new features every quarter or so. So you can expect quarterly versions of this video with updates. I'm also going to link a Firm of the Future article that actually, it's sort of the written version of this video. It's got some screenshots. It's just kind of like, their version of the announcement. Just mine's actually a little bit better because you actually see the product and you kind of see how it works. By me clicking and me telling you, why this is valuable or not. I'm also going to give you a link right there in the description of this PDF, which is like a sort of like a PowerPoint presentation of slides that they used to do their demo or their presentation of the new feature. So you'll have both the Firm of the Future article link and the slides in the description. Last thing I want to say, if you're looking at this and you're like, oh my God, I need this, you can buy this directly through Intuit, but you're going to go through their salespeople. We recommend that you go through resellers, people like me, people from my team, because we are selling this software too. We're helping people migrate from QuickBooks Desktop Enterprise into this, from QuickBooks Online into this, moving from NetSuite or Sage Intacct or other systems into this. This is going to be a big deal. Intuit Enterprise Suite is going to be Intuit's answer to many of their competitors that are advertising the outgrown QuickBooks. Go to this other system. So IES, Intuit Enterprise Suite, is their version of have you outgrown QuickBooks? This is their answer. Is the software perfect? No. Does it have flaws and it's got room for growth? Absolutely. But the pace of innovation I've seen with this thing in the past year has been incredible. Actually, even less than a year has been incredible. And in these 3 major releases that they've done the last 3 quarters, they add more features one after the other. And I'm telling you, I see a great future in this. So without further ado, here's the actual demonstration. So I want to start with what it's one of the most practical things that Intuit has created with AI, where I go, oh, finally, it looks like they're actually leveraging AI for a practical thing, which is contextual searching. So you can actually, in the search bar, you can type transaction type, reference number, contact, which could be customer, vendor, employee, date or amount, date ranges or amounts, and you can use natural language and it converts that into a search query. Super cool. Okay, and this started as an IES thing, and in some of the tests that I've been doing in my regular QBO files, I'm starting to see it work in those files as well. So I'm not sure if they're advertising in IES, but it's working across QBO. I have a feeling this will work across QBO, so it's actually great news. Exactly. So this started as an IES innovation, and I think that they realized that this could work for everything, because their biggest budget for AI stuff is in the IES team. So it could be a happy accident that QBO gets some of the stuff. So you can type, bill from Home Depot last week or something like that, and it will run the filters. Like, it will literally open the search bar for you. It would select the date range. It will select the transaction type. It will select the contact and run this for you automatically. I also like the fact that you can say, bills between 500 and 1,000. And even the in-between search, it understands what that means. So it actually goes and does the, you put the two numbers, you say in between, and it knows, or less than, or more than. So I actually absolutely love that. And I love that particularly because I don't do a lot of typing. I actually, I have a hot button in my computer where I just press a button. It enables my microphone. So I talk to my computer a lot. So like I can imagine myself where I'm like doing deep work, I'm doing stuff, and I'm like, I need a transaction for $500, and I turn on my microphone and I literally just put it on the search bar, press enter, and save myself the time of looking to where I'm gonna go and typing it. So like using natural language nowadays is gonna be a huge enhancer, because now I'm thinking this is gonna be the gateway into doing work with QBO with voice. So if they are able to achieve this, they'll be able to achieve this where you're doing bank coding, and instead of clicking on the drop down and looking for advertising, you just say advertising. Next, you say car expense. Next. So imagine a world where you're doing a combination of using your mouse, your keyboard, and your voice, and you're interacting with the software. So I think this is going to open the floodgates to an amazing future of being able to now use another tool, which is your voice, that we haven't literally not been using for years as accountants and bookkeepers. Yeah, and I've spoken to enough people at Intuit to tell me, get prepared. At Intuit Connect this year, we're going to announce some really, really amazing AI innovations, and I don't doubt that they will be amazing. Will they replace an accountant? I don't think so, but I don't doubt that they will be amazing. Next thing I want to talk about is multi-entity. So this has been the flagship sort of value proposition of IES. As a matter of fact, the reason why IES is it's very much a viable business proposition for Intuit is because they want to have revenue per company, and they want to deal with companies that deal with multiple entities, right? So when you deal with multiple entities, whether it's an operating company, a holding company, a real estate company, which is a real typical kind of setup for these mid-market businesses, that's when they think of revenue, they think of revenue per business, right? There's 32 million businesses in the United States. That's what they want to tap into. That's what they project to, right? So they have 6 million customers. They want to be able to have 10. And if they do serve multi-entities and they solve the problems of multi-entities, that's a huge revenue opportunity for Intuit. And right now, desktop users have unlimited company files, and Intuit is not getting any of that revenue, like any of that additional potential revenue per company. Okay, so in the multi-entity world, the multi-entity dashboard is great. I think we talked about it on the last episode. You can see a consolidated P&L as a dashboard, right, with a graph, for all companies, for some of the companies. So you could choose, which of the companies you want to visualize in the dashboard, and it'll only show you the dashboard for those companies that you choose. So either the entire, enterprise and all the entities on the whole portfolio, or specific companies. You have a P&L, you have an expenses, an income chart, you have accounts payable and accounts receivable. And now they add it to complement the accounts payable and accounts receivable graph, because in the last release, they added the graph but not the report, a consolidated AP summary and a consolidated AR summary. So this is a new way to visualize reports in IES, because now when you look at a consolidated AP summary or a consolidated AR summary, now these vendors are now grouped by the entity. So you're going to see entity A has all these open bills, entity B has all these open bills, and they're both summarized and grouped by the entity. So you can basically, in a single report, see your accounts payable aging across all your entities, and also you can expand each one and see them individually by vendor. And the same thing with the AR report. There's also, they added a new elimination line, which we're going to talk about. That's the new intercompany eliminations. Is actually really, really interesting. Last time we talked about intercompany eliminations mostly within the context of a journal entry. Now they're transaction level. So we'll get into that, and because that's really cool. So I'm gonna kind of just list all the consolidated reports that they just added. So they added consolidated AR summary, AP summary, the detailed version. So consolidated AP, consolidated AR, consolidated balance sheet, which that's not new. Consolidated P&L, not new. Consolidated cash flow, that's new, very interesting. Consolidated trial balances is great. Consolidated expenses by vendor, and a consolidated transactions report. However, even though the consolidated transactions report is great, so in other words, you go to reports and then you look for, there's now a consolidated grouping of report. You go to the consolidated transaction report, and it's kind of like a transaction detail report. The only challenge with this report is that the normal QuickBooks behavior is we look at a transaction and we want to double click to see the transaction. You can't, because they would have to now devise a mechanism for you to click on the transaction and it log you out of that company, log you into the other company for you to be able to do that, right? So I'm not sure how they're going to solve that problem. Yep.
So you can't drill through the report?
Yeah, you can drill down and see the details, but you can't open the transaction from it, because remember, these are multiple entities. So it would have to literally log you out and log you back in. So that's the challenge. So they haven't figured out what that mechanism would look like. But the one thing you do see, it's a brand new column, is imagine a transaction detail report that now has a column called company name. So you can actually see, which company name the transaction belongs to.
Okay, that makes sense.
Yeah. Another thing that's a little bit frustrating is that when you go into a consolidated, and again, they might fix this by the time we talk about next quarter, but when you go to a consolidated P&L, which you would say, okay, if they figured out how to do a consolidated transaction detail report, I should be able to drill down on the consolidated P&L. So right now, as of today, you cannot drill down even in a summary consolidated report into the detail report. So it's two separate reports that you have to run separately. So one thing that's frustrating about this, especially for people that have been using QuickBooks for a long time, is that you'll be double clicking until you die, literally, to try to make that report open. So we're just so used to that behavior where I'm looking at a summary, clicking to see drilling down to see a detail, and drilling down to see a transaction, that currently, as of now, that's not there. It doesn't make the reports useless, but it really, really hurts the experience, because that's kind of what we're used to when we use QuickBooks. We're also hoping, crossing our fingers, that this is a short-term issue that they're going to fix at some point. The other thing that's really interesting is you can run a consolidated P&L also by class or by dimension. So the reason why this is interesting is because, and I kind of have to tell you, imagine this. Imagine you have 4 or 5 entities, but you have the same classes across all the entities, right? Admin, overhead, operations, sales and marketing, whatever class you would have, or whatever dimension. So let's say these companies have dimensions or classes in common. So now you can run a consolidated report. So remember, multiple entities, and then you can use a class or a dimension to run that report. So you're gonna have to imagine a situation in which you kind of have consolidated entities, and they all kind of follow the same class or dimension type across the board. So that's actually super interesting, where you can now cross-consolidate the P&L, but also break it down by class or dimension. The next thing is called the KPI library. So if you're using QBO Advanced, you might have already seen a little tab that says KPIs in QBO Advanced. However, those KPIs are limited to growth, profitability, and cash flow. Those are actually the 3 categories they have under KPIs on QBO Advanced. Under IES, they added a whole slew of additional KPIs into the library. So you have revenue, cost of goods sold, total expenses, operating expense ratio, operating expenses, net profit margin, expenses as a percentage of revenue, current assets, liabilities, cash on hand. So they added additional, sort of like a shopping cart, a library of multiple KPIs, and you can just add them to your scorecard. And none of these things, unfortunately, are available most of these things are not available in QBO Advanced. QBO Advanced gives you the basic KPIs. There's actually a lot more sort of powerful KPIs. So you could really construct a a customized report that only shows real summarized data by using all these additional ratios. So it's a little button that says KPI Library on the top right of the KPI screen. And here's probably the biggest thing. It was my biggest criticism to the developers when we were talking about multi-entity consolidated reports. The biggest challenge is when you have 4 or 5 companies and they all have different chart of accounts. That's a challenge, right? So what they added was kind of 2 things. One, they added a tool to help you remap your chart of accounts across multiple entities to make it match one of the entities, and simultaneously an AI tool that does some of that mapping for you. Okay, so when you go into the multi-entity section, you're now going to see sort of a little AI advertising that says, hey, using the chart of accounts of your main entity or your principal entity as the guide, I now have a structure that your other chart of accounts should follow. And if they have different chart of accounts, it will remap the chart of accounts for you. So you go into the next screen that says review. And what it does is it lists all the entities that you have available. So whether, company A, company B, company C, and then you pick which is the one that you want to work on. And then it will give you, broken down by assets, liabilities, equity, expenses, it will give you the accounts that it automatically mapped for you. So it tells you, hey, I found something to map materials to. And if you say yes, and if you approve, so there's literally an approve button, which is great. So if you approve it, it will merge the accounts, it will rename accounts, it will reorganize accounts across all your entities, again, to match or mimic the same main principal entity. This is something I recommend profusely when it comes to P&Ls, and maybe not so much when it comes to balance sheets, because balance sheets are a bit more unique. But if you want to run a consolidated P&L that makes sense, you got to have at least higher level chart of accounts that all need to match. Doing this is highly destructive. Like there's no going back, because there's no undo when you rename accounts and when you merge accounts and that sort of thing. So, and it will tell you, what it's doing, if it's merging, if it's matching to another account and all that stuff. Like for example, I have an account called direct costs in my main account, and then it found materials, lumber, metal, and PVC in one of my subsidiaries. And it's attempting to merge all those into my one direct cost account. So you have to be very careful that you might be approving something that you don't want. Like maybe you don't want that. Maybe you want the subsidiaries to have a unique subset of accounts that are in a second layer of sub accounts, where maybe you just want the first layer to match. So it's a lot of thinking that you have to do. And unfortunately, it's not like super obvious. Like it would be great if it shows you this is what your P&L looks like with your old chart of accounts, and here's a simulated P&L, what it would look like if you accept this mergers and all these restructuring. So that's not there. All you have to do is either approve or not approve. There is a button that says see balances, where it actually does show you, but it's not structured like clean like a P&L. It's just like a chart, and it's hard to in a podcast format. It's hard to state, but it would be nice to see it like a P&L report. The current system right now is a cleanup tool. It's not a consistent chart of accounts tool. So eventually, what they want to get to, and we talked about this with the product managers, is I would like to have a single place where you create a chart of accounts, and that would be like in your principal company. And then all the other companies have a chart of accounts, but you can't change them. The admin of the multi-entity system has it locked in, so there's only one place to have a chart of accounts, and then maybe the admin can create individual sub accounts, but they're still thinking through that. So right now it's just a cleanup tool. So if you, like you said, if somebody goes into one of the entities and adds an account, you would have to go back into this tool and find the potential restructuring and press the button and approve it and go through the process. Now I want to move into expense allocation. So they introduced expense allocation on the last update on I forgot it was March or April of 2025, but they brought it to the next level. So let's say, for example, you're in one of the entities and you have an expenditure that really needs to be allocated across multiple entities. So you click on allocate, And then because you have multiple companies attached to it, you say, you know what? This one cash outflow that I'm paying from my principal company really belongs to, all the companies. I'm going to split across from it. So one classic example is I got a holding company and I got 27 entities that are all real estate. And then I have one expense like, the tax preparation fee that is for the whole entity. And I want to spread that across all the entities, right? So that's a classic example. Or I could have other, situations in which I use very specific percentages. So now when you click on allocate, before, you literally just pick, which companies you're allocating to, and then pick the percentage, and that's it. So you manually go in there and put 20%, 10%, 15%. Now, QuickBooks will go back, read financial data from each of the entities, and then choose the allocation for you based on that criteria. I want to go through two scenarios. Scenario one, I own three entities. Entity A, it's about 50% of the effort or the work, the wealth, the sales, whatever, however you want to think it. Entity A is like 50%. Entity B is like 40%. And entity C is like a little tiny thing, and I only do 10%. So you can go in there and say, you know what, I am going to select the percentage, and I'm going to manually go and say, hey, for entity A, it's going to be 50%. For entity B, it's going to be 40%. For entity C, it's going to be 10%. So you're manually putting in there how you want to allocate one expense you're paying from one company across all the entities and put it in the do to, do from. So that's scenario A. Scenario B, I don't have a fixed percentage. Like I don't have, like, it's not like in my mind, it's not like always 50, 40, or 10. Scenario B could be, you know what? I am going to proactively change the percentage dynamically based on the results or performance of the multiple entities, right? So instead of you choosing the allocation percentage, you have IES calculated for you. So when you go allocate and you pick the entities that you want to grab the historical information from, it gives you a couple of options based on sales, based on expenses, or based on assets. So if you say based on sales, you have, unfortunately, they didn't give you that much in this particular drop down, which are the different options. I wish they had year to date or year to last month. Right now you can do current month, last month, or last year. So the most typical scenario here would be like last year or last month, like realistically speaking. But this year to last month could be another one that it's just missing right now. So you say last year. So if you click apply, it goes and reads the P&Ls of all these entities, and then based on the sales of each of the entities, it does the allocation for you. It's amazing. I love it. I mean, it's just awesome. There's a couple challenges here, which is you have to pick it each time. So like it would be awesome if there was a setting where you say this is the fixed allocation setting, so that way I don't have to click and last year and choose. Is it sales? Is it by expenses? Like right now you have to choose, right? Because it assumes that every single transaction you're going to make this decision. But it would be awesome if it's just global, right? Like as a company, you decided, hey guys, all allocation will be based on last year's sales. Technically, last year's sales won't be affected. For the whole year, they will be doing accounting. Therefore, it should just automatically choose that for me instead of me having to like manually pick it each time. But my challenge with it is you only have last month, last year, and current month, and I don't know. I'm missing this year, quarterly, or this year to last month, or this year to date. Like if current month is relevant, then this year to date should be relevant too. So I found it strange that they only had like 3 options there on the timing, but it's absolutely fantastic the fact that you get percentage of sales, percentage of expenses, percentage of assets. That's amazing. I mean, that's really awesome.
Yeah.
Okay, staying within the same theme of intercompany multi-entity, this new concept is really awesome. And I won't take credit for it, but I spend lots of hours with the development team thinking through this. And I think first of all, they did listen to me, and they did take some of my ideas. And my ideas were not revolutionary. I think they will probably come to the same conclusion. So this is called intercompany sales. And essentially, prior to this, the only way you could do intercompany transactions would be through this concept that I call a three-dimensional journal entry, which is you go and create a journal entry, and then the journal entry itself allows you to choose whether or not this is an intercompany transaction, and inside the company, the journal entry, you pick for every line item which company are you affecting, and you're doing a single journal entry that's writing 2, 3, 5 journal entries depending how many entries, and it's doing all the do tos do from for you automatically. That's all amazing. Okay, it happens. It's incredible, super awesome. And the allocation tool that I just talked about, it does the journal entry behind the scenes. So like you don't have to go into the other company and put that you have a payable. So like a single transaction, the source of the expense transaction gets allocated on the other side of the company. That do to do from and the expense is being allocated as well. So that's amazing. However, the challenge is what happens if there's a sale? So we got the expenses to take care of. What if there's a sale? But we're talking about an intercompany sale. We're not talking about that one company is selling in behalf of other companies, because that's all wacky. We're saying company A is selling to company B, right? Or company B is selling to company C. And then when I look at my consolidated P&L, I don't want to see the revenue and cost of goods sold for these entities, because it's just like moving money across entities. So if you're looking at the total revenue of consolidated entities, you can inflate your revenue, even though the cost, kind of makes the net income the same. You could potentially inflate the revenue of a consolidated P&L if you don't eliminate intercompany sales. So you have to do a journal entry. You have to find out how much did I sell from this company to that company, and you have to do a manual journal entry. What they've solved is to do the manual, that elimination on the P&L natively, naturally on the transaction. And they also solved the automation of the other side of the transaction. So again, company A invoices company B. Now, when they invoice company B, they're going to pick a customer from the drop-down menu, and all your multi-entities will be created as a customer, as a normal customer, but it'll have a little parenthesis at the end that says IC customer, so you know that this customer, any transaction you write to this customer, any invoice you write to this customer, will create the bill on the other side automatically. Okay?
Ooh.
Yeah, super awesome. So we start with creating the invoice. So we'll just, again, company A invoices company B. Company B is a customer in the company A's list of customers. You invoice it, you hit save, and you're done. It's like a natural invoice. And then when you get paid, you receive a payment. All that stuff happens natural. But when you go and you switch over to company B, and this is kind of the neat part, when you switch over to company B and you go into bills, now bills is split into two sections. We have what they're calling our internal bills and our external bills. Now, I kind of would prefer, honestly, to have intercompany bills to be its own category, and not like have the intercompany bills be also matched with my external bills. Different personal preference. But you go, and then bills, remember when they added the concept of approving bills, whether you're using a QBO advanced workflow to approve a bill, or you're using the receipt feature to bring the receipt in and approve that bill to be written into QuickBooks, the bill, the invoice that you wrote from the other company shows up as a potentially intercompany bill that then you click on review and you approve. Now, right now, they don't have a mapping system where I can say, hey, if I use this item, make it that item on that side. Or if I use this account, make it that account on the other side. They haven't created the sort of preemptive mapping. So when you go approve that bill, you have to manually choose the category. So it would be good to automate that part, but you still have to choose the category. But what's really cool, Alicia, is automatically in the attachments, the invoice from the other company, the PDF, gets attached to the bill. Correct. The bill's there as a placeholder. The bill date is uneditable because it should match the invoice date on the other side. The due date can be changed, which I find it kind of interesting. I think that should be also kind of locked in by the terms. Maybe in my examples, I didn't lock in a term before. The description comes in, like if there was a description of the invoice, the description comes in, but you do have to select the category. And this is the reason for that, because it's possible, and look, there's all sorts of logics that you can go into and use cases, but it is possible that in company A, I'm going to invoice 17 different lines. right? Because I want to break it down that way. I want to say, look, 17 of these units and 14 of this unit and 13 of this unit. But for company B, I don't need to break it down. I just want to have one, it's all cost of goods sold, or it's all direct costs, or it's all labor, or whatever it is. So it's possible that you don't care about a line breakdown and you just want to have a single line. It's possible. But the problem is you will never get to true automation until you do one-on-one line mapping, where the account or the item being used is being mapped with the chart of accounts or the item on the other company. So I'm thinking to myself, this is going to be version 2, maybe in a couple of months or something. They'll solve it. They'll crack this nut. Okay. The next thing is called an AI-powered cash flow forecast. And I got to tell you, honestly, we probably should dedicate an episode to just talking about the philosophy of what the hell is cash flow, right? Because every customer in the world goes to an accountant and you say, hey, what do you need from me? And they say, I need cash flow. And you're like, I don't know what you mean by that. Like everybody has a different definition of what cash flow is. What Intuit is trying to do, and they're kind of working off what they've been trying to do for, I would say, at least 10 years, which is try to predict the cash flow, right? So they're using AI now instead of using trends. So like if you remember before, it really wasn't using AI. It was using pattern recognition. So it was looking at your monthly expenditures in your bank feed and assuming they would happen again, plus outstanding bills, plus outstanding invoices, and using the due dates and triangulating those things, try to guess how much your cash flow would be a month from now. So it now has the ability to not just forecast it for you using AI, but now you can actually create a cash flow forecast report, something you never had. I mean, a cash flow forecast budget, so to speak. So you actually have a full grid where you go in there and you actually say, you know what? I think I'm going to get this much in cash flow here. So it's almost like it's similar to a budget, but instead of being a budget that you compare in a sort of, actual versus, instead of comparing an actual versus budget type of report, it's actually a cash flow forecast. And instead of being organized as income, cost, expenses, the way a budget would be, is organized as money in, money out. Okay, so money in will have all the money in categories, and money out has all the money out categories. What I haven't seen yet, and I don't know if it's maybe my file or maybe they haven't done this yet, I haven't seen them add a balance sheet accounts into money in and money out. So like money in, we have a loan coming in, right? So that would be a balance sheet account. Or money out, I'm gonna pay back a loan, or I'm gonna distribute some dividends. So I haven't seen that like just shown explicitly in there. And maybe it's just a function of me not using it, but I think that might be coming in like sort of like phase 2, where there would be an actual cash flow forecast that you can create. Even though it's hard, and it's okay for things to be hard and difficult to fix and all that stuff. If you have a AI forecast that's organized as money in and then money out, and then money in are just your income accounts, and then money out are just your expense accounts, that's a P&L. That's a budget, right? So there's really no difference between a true cash flow forecast and a budget if you're not including balance sheet movements in the process. So where they kind of missed the mark, in my opinion, on, let's call it version 1 of this, is treating an AR forecast as a P&L or as a budget. I think they need to add, I mean, it's more complex, but they need to add those layers of complexity where money in and money out could also be affected by that. And honestly, listen, there is money out on income accounts. So like I'm going to give a refund, right? That would be a money out on an income account. Or a vendor's going to refund me something, that would be money in on an expense account. So I like the concept of money in, money out, because it's very easy to visualize, but making money in, money out a P&L doesn't fix the problem. Okay, that's why I say, maybe this is a very long, deep philosophical discussion of what a cash flow forecast is or is supposed to be. The other interesting thing, kind of in this same sort of like forecast world, they added what they're calling 3-way forecast. So in the last episode that we discussed this, we saw that they had forecasting capabilities beyond just budgets, and quite honestly, they have that in QBO Advanced anyway. They added forecast in QBO Advanced. So that was technically not a new thing. But what they had added in Enterprise Suite is the ability to forecast a balance sheet, which IES does. I mean, which QBO Advanced doesn't have, and you can also forecast a statement of cash flows. And granted, I'm a CPA. I got 16 years of experience. I've been doing bookkeeping for even longer. I've never built a forecast for a statement of cash flow. I've never been tasked to do that. So that's it. That's super interesting. The fact that you can actually do that. But what's really cool is it does it for you automatically based on your forecasted P&L or balance sheet. So you enter your values in your forecasted P&L and balance sheet, whatever the values are, and it'll automatically project what that future projected statement of cash flows will look like. It does that for you automatically. So that's super cool because again, I've never seen a quick way to build this, and maybe this is why people don't create forecasted statement of cash flows, just because it's just so challenging to build. So the next thing is, and I unfortunately this is gonna make you very jealous because I know you're not using a lot of IES, and this is something that it makes me both jealous and a little bit frustrated. It's an amazing feature that would save people so much time. And in my opinion, it really has nothing to do with Enterprise Suite. It's really a basic bookkeeping functional tool. So this might be something that maybe possibly crossing my fingers here, that we'll see this in QBO as well. So let's say, for example, you have a bill and expense where you have multiple lines, right? And then so you pick the account for each line. But then you want to go down and select the same class across all the lines. So when you hover over any of the classes, so this works both with classes and dimensions, there's now a little pop-up that shows up that says apply to all or apply to empty lines. So if you click apply to all, it basically copies down the class across every line item in that transaction. Now we've solved this with WriteTool, and shameless plug for WriteTool. We solved this with WriteTool, but now that QuickBooks has been inspired by WriteTool to add this into IES, we would love to see this in regular QBO as well, because this is really, really useful stuff. Now, good news, it works beautifully with classes and dimensions. Bad news, only works with IES. Other bad news, it doesn't work with categories or customer project or any of those other things. So it's only working with classes and dimensions for whatever reason. There's also an option so you have an option to apply all, which basically copies down. And there's also apply to empty lines, which is really cool. So if you have say 2 classes and you went and manually chose the first line is class A, the third line is class B, the 7th line is class A, and then the rest should be class C, you just pick class C and click empty lines, and it just fills in all the empty lines with that. It's incredible. It's amazing. I can't believe how excited I am for something that I'm never going to get to use because I got one IES client out of 200 QBO clients. The last piece I want to talk about is called Milestones. This is super cool. Now, not super duper useful yet because I haven't figured out what are the reports. Classic Intuit, right? They'll come up with this amazing feature, but they don't know what reports we need, but I'm sure they're going to solve this fairly soon. But basically, when you create a project, you now have a drop-down list of milestones you can create under that project. So just imagine yourself creating a project, and currently when you go create a project, you put the project name, the customer, the start date, the end date. But now you have milestones, so you could do phase 1 or phase A, phase B, phase C, and then each milestone has its own start and end date. So you could track the progress of a project, not just in project beginning and project end. Now you kind of have a little bit of project management software where you can do it by milestone. So right now, when you're in the projects, you get to choose whether the phase has been completed or not. But as you mark the phase as completed, the project progress doesn't get automatically changed. You still have to edit that. So you're right, the project progress, which by the way, only IES has project progress, and QuickBooks Desktop Enterprise has project progress, where you actually manually pick where the project is, so you can gauge that against the financial progress, because you have real progress, right? This is the stuff that a job foreman will observe and go, yeah, we're definitely like not even close to 50%. And then there's all the money you spent where the financials are telling you you are at 50%, but the reality doesn't match. That's why you have these two concepts of the accounting progress and then the sort of the observable progress. So there's still a field where you manually set the project progress, but there isn't a workflow that goes from completed phase to project. In the project detail screen, now you not just see the project information, but you see the milestone information with the due dates, with whatever is completed. And they created one report for milestones, which is called Cost My Milestone. So essentially, imagine the classic, cost estimated versus actual cost by item in a project, but now it's by the milestone and by the item. So the items are now grouped by milestone. So when you go and create a project budget now, that's a whole nother thing. And I think we talked about project budgets and we on the last episode, and I think we talked about how we were a little bit confused about the project budget itself because we weren't sure whether the project budget supersedes the estimate. And I'll confirm with you that the new project budget feature supersedes the estimate, right? The project estimate. So when you create your project budget, which is focused around how much it's going to cost you by item, you now group these by the milestone. So prior to this, and in the QuickBooks Desktop Enterprise world, you know if you're over and under by product or by item. Now you can do both by item, but by item inside the milestone. Because one of the problems that we had, for example, with QuickBooks Desktop Enterprise with estimate versus actual, is let's say, for example, I have a labor line. I listed labor 17 times in an estimate, right? Where I got one type of labor, two types of labor, three types, and I didn't create separate products. When you look at the estimate versus actual, it consolidates it by the item. So you don't know if these items are used in one context or in the other context. By separating and splitting it by milestone, now you can have the same item used multiple times, but it's grouped by that milestone. And that is powered by the way you do data entry now in IES with projects. So when you create an expense, right, and then you use a project, now you also have to choose what milestone that expense is associated with. So it's part of the data entry process for you to attach the milestone to that particular expense when you do your job costing. And that's it. There's probably more little things to mention, but I think we covered a lot.